Now let's take a look at the state of the U.S. financial sector, also financial regulation, and also what's happening around the rest of the world. We're joined by Dick Kovacevich, who is the chairman emeritus of Wells Fargo. Dick served as CEO for 9 years at the bank. I was so close, wasn't I? Kovacevich, thank you so much for joining us this morning. Dick, what are you doing here in the Asia Pac?
Well, I'm here on both business reasons and personal reasons. I'm a guest of the Asian banker, so we're visiting many cities here in Asia, and then later on this week there will be their annual meeting in Bangkok, where over 100 financial institutions will be there, and I will be the opening speaker of that.
Okay, so talk to me about the health of the U.S. banking sector. Are U.S. banks back to full power after 2008?
I think most of them are. There's still some ones that are in difficult shape, but a lot of progress has been made. Profits are actually exceeding most people's estimates, and I'd say they're quite healthy at the moment.
And isn't it interesting that Wells Fargo is that now the largest U.S. mortgage servicer, coming off, of course, the subprime mess that we saw in 2008? Is that the right strategy right now? If you're a bank, you want to be in the vanilla business?
Well, we've been at one time or another either number one or number two in mortgage originations and servicers for the last 20 years. But we did not participate, thankfully, in the subprime mortgage fiasco, and therefore we've gained considerable market share since the collapse of that business.
So does it make sense to you? I mean, in the world of banking right now, we have the Morgan Stanleys and Goldman Sachs complaining about this, the Volcker rule, where you can't do any prop trading, you have to cut down your derivatives business as well, but yet Wells Fargo is making money just by, doing those plain vanilla mortgages to the U.S. consumer.
Well, we've been doing this for, the past 25 years, and we do not, never have done a lot of prop trading, so it really won't affect us. But I think the issue of the Volcker rule is just how it gets implemented. You certainly do not want to deny the customer side of trading. Proprietary trading, you may want to reduce, but you can't. If it causes financial institutions not to be able to serve their customers, that would be bad for the economy. And so it's how it's implemented that's what is important.
Now, amongst the big U.S. banks, it looks like Wells Fargo is probably more domesticated, shall we say, because they don't really have a big international reach, but they're trying to change that here in the Asia Pacific, aren't they?
That's correct. When we acquired Wachovia, what came with it is the largest correspondent banking operation. That is, if you will, the bank for other banks. And their global financial institution business is number one in the world. So we inherited that with the Wachovia acquisition, and using that as a base, what we want to do is expand internationally, but really leverage our U.S. presence in that sense. We will not become a local bank internationally. So our U.S. clients who do import and exports, we will facilitate with people on the ground throughout the world. And for Asian clients who want to do more business.
Does that mean more hiring? Does that mean more headcount in the Asia Pacific?
Absolutely. Yeah. We have about 3,500 people today, a little over that in Asia, and that will continue to grow. And we will help the Asian banks and the Asian clients who are doing business in the U.S. So it's leveraging our U.S. operation.
Yeah. How much do you think headcount might increase each and every year?
See, I really don't have a figure on that at all, but I think it will be fairly significant. Yeah.
Yeah.
From a relatively low base.
From a relatively low base. Yeah. So do you want to get into the Chinese market, because there's talk about bad debts right now that's hampering the Chinese lenders? I mean,
as I said, we won't be doing local business.
Right.
We will be supporting our U.S. clients. We will be supporting the banks that we are there, handle their trade finance and payments. We will not do local business.
Right.
Now, one thing we are going to do, however, is we're going to establish probably about 8 commercial banking offices throughout Asia. So there are people on the ground who we could then serve our U.S. customers better and serve our Asian customers better.
Okay, so I guess some people should be getting their resumes into Wells Fargo then for the Asia Pacific. Dick, enjoy the rest of your trip across the Asia Pac. Dick Kovacevich joining us this morning on First Up.